Hello everyone, hope you are doing well. Okay, so I'm your presenter of the day, Mr. Dinesh Kumar Lalwani, and I've been teaching SBR since 2010 and operating here at a niche market of Hyderabad. Few of you people might be knowing the city, and a few of you, very rare, possibly might be knowing my name even. But I've been teaching SBR, which used to be P2 earlier since 2010. So I've been given the opportunity to practice you to pass this SBR subject. If you are getting my voice properly, please simply raise your hand. And if you are having any trouble with your voice, do let me know as well. I can witness the hands raised. So you are getting your voice, my voice properly. Fair. Very nice. Thank you so much. Okay. So the exam paper that we are supposed to cover during this 5 days journey as SBR, which, as I said, formerly used to be paper P2 and a strategic level paper. And I will personally try to clear many confusions that students go through while studying this paper. I've shared the presentation, this PowerPoint with you in the handout section. You as participants can observe two options at your side. One is question mark, where you can raise your question at any time. You can raise your question and don't hesitate to ask a question twice, thrice, or 100 times until you get satisfied with it. You can repeat your question. Plus, the other option you have is to raise your hand. Obviously, you are not allowed to use your mic, and the chat box is also not allowed. So how can you communicate with me is merely by means of that questions section. The questions that you'll be raising will be showing at my screen with your name. So I'll try answering your question through my mic, and if the need arises, I'll type the answer uh, to your question. Fair. Okay, so I have attached my email there. This can be very slow channel of communication now. I have reported my WhatsApp number as well, and my students told me not to report your WhatsApp number because many students from across the globe will start disturbing you. But I never get disturbed. You are always welcome to ask, and you are always welcome to clear your queries. But I would appreciate if you could join this WhatsApp group that the link I have attached with it, and you might be getting the link from the ACCA Pakistan as well. But if you have got this PPT file, you may click this link and you will be getting direct access to the WhatsApp group. You people may join the WhatsApp group and we can discuss our concerns and queries very comfortably over there. So rather than dropping your private messages on my WhatsApp, I would appreciate if you could use that WhatsApp group so that all the students over there will be able to hear your question, and we will be acting as a community. I must be learning something from you, and you may possibly be learning something from me, or other students may be able to guide you as well. So we'll be acting as a community on the WhatsApp group. Any senior or any student who can understand the question of another student, I would welcome to answer on the WhatsApp group as well. And if you have got any queries or concerns, we will rather be discussing on WhatsApp. But during these live sessions, if you feel any trouble with any of the area I've explained, you can pause me. You can raise your question immediately, and I'll stop for you. I'll pause for you, and I'll adhere to your concern first. So I've cleared some things that we'll be contacting via WhatsApp group, and try not to contact through private messages, but fair, you're welcome. And let's start with my introduction, which is not actually important for you actually, but part of this. So explaining you this, My name is Dinesh Kumar Lalwani, as has been communicated by ACCA earlier as well. I here in Hyderabad, a very possibly small city for most of you, and from out of Pakistan, you obviously don't know the city names here, except possibly Karachi and some Islamabad. Fair. So Hyderabad is a city here, and I've been running a college with the name of Alhamd Academy. I'm managing director. I'm ACCA member. Old aged, of course, because I qualified my ACCA in 2010 and got my result in 2011. Also said, well, I'm teaching at universities. The Zabish University is well known here in Pakistan, but would of course not be well known for others outside Pakistan. And there is another professional qualification offered here in Pakistan, that's ICMAP, that is Cost and Management Accounting. And I use the strategic level of ICMAP here in Hyderabad campus. Plus, I've been teaching at Alhamd, as I told you, since 2010. Quite a long period, I believe. Okay, some boring areas. What's the aim of the paper? Very important to note, the aim of the paper. Majority of the students focus on calculations and technical calculative parts of the standards. So if you hear about IAS 19, you get surprised with it, about hearing this current service cost, that actuarial gains and losses, remeasurement components. You need not to worry about anything. Paper SBR rarely and seldom focuses on calculations. You have, of course, gone through the past papers, and you can see, you can personally calculate, refer to the answer of any attempt, search out for the numbers in the past paper, and you will find that very few area, I personally believe 15% in best case scenario, 15 to 20% of SBR tests your numbers. Rest of the paper does not have anything to do with the calculations part. So what's the aim of the paper? We must know this, that the examiner wants you to be able to discuss. The first expectation of examiner from the SBR attendees is that student must be able to discuss. Number one. Number two, the students must be in position to apply. What? Apply what? We get multiple transactions in a business course. You will have to apply the applicable accounting standard, its interpretation of framework. So this examiner of ACCA, the examiner of SBR is not expecting from you to perform calculations, but the examiner is rather expecting you to get through the discussions and applications. Discuss what? You'll be given a complicated scenario, possibly. You will have to discuss how would this particular transaction affect the financial statements of company. You'll have to discuss. Number two, you'll have to apply. We'll be going through today with some cases in our presentation where we'll observe some complications about the applications of accounting standards. Number three, you are still not required to perform calculations, complicated calculations. The third expectation of the examiner from SBR students is to evaluate. You must be able to evaluate the concepts and the principles. Fair? Concepts, principles, and practices. There are three things. You must evaluate that on a particular transaction, which accounting concept may be applicable, what accounting principles could apply, and what are industry practices. Remember, IFRS, the ISB board, have been trying level best to develop the standards for maximum possible financial transactions, but the practice is practice. So in practice, we might be getting some technical areas where the standard is silent, where the standard is quiet. So if the standard is not telling us accounting treatment of any particular financial transaction, then we'll be going through the industry practices. We'll discuss it that underpin the preparation and interpretation of corporate reports in various contexts, including the ethical assessment of management stewardship and information needs of a diverse group of stakeholders. Fair. So rest is rubbish. The main area that we must focus on, that here as the aim of SBR examining team, the examiner of SBR is nowhere expecting from you to perform technical calculations. By the end of your preparations to SBR, you must be able to do what? Discuss. You must be able to do what? Apply. And you must be able to do what? Evaluate. Fair. Three things. No calculations required. If the examiner asks you to perform calculation, be thankful. Be thankful. You'll not be getting those cash marks, because we personally believe that the calculations are cash marks. Fair, but you'll not be getting those cash marks, of course. Fair. So following ahead, the objective of SBR, the aim of this paper, the subject matter of the syllabus requires students to have a cohesive understanding of ISB's conceptual framework. A very important area, please. This is very important area. You have to go through the conceptual framework. Let me explain you an example. What happened with the tutors? I do remember back during a journey to the journey as a tutor, we used to teach students accounting standards. What commonly happened? That we used to teach IAS 17. You people must be familiar with IAS 17. IAS 17 used to tell us that the lessee must not okay, let me show you my screen. Okay, let's understand my case first. That while back during our teaching career, we used to tell students that IAS 17 does not allow operating leases to be capitalized. If you have entered into a finance lease agreement, then that can be capitalized. But in case of operating lease, you cannot capitalize. So telling you something, what? As per IAS 17, what used to be the case? That a lessee could not capitalize assets acquired under what? Operating lease. While in case of The lease being classified as finance lease only. The lessee was supposed to capitalize the asset. That's all. So the case that we faced was the students used to ask me that if we obtain an asset under operating lease, say for 5 years, out of total life of 10 years of an asset, we are using the asset for 5 years. Why doesn't the standard allow that to be capitalized? That was a very logical question. But what answer we tutors used to present was, there is substance in case of finance lease, whereas substance is not there in case of operating lease. Though the question by a student was very rational, but what we used to do, we used to follow the standards, the regulatory framework. As an example, I can say there are two approaches. For a game, we might support a team of players, or we might support good game. What do you think is better? Of course, you cannot answer, but should we support a team that's a favorite, or shall we support a player, of course that's a favorite, or shall we support a good game? If we are supporting the team, if we are supporting a player, we might not be able to justify every action, but we should rather be supporting the good game. Any player playing well, playing nice shots, tackling it well, must be appreciated. What P2 used to focus on, P2 used to focus on the treatment by standard. Whereas after few years, when we convince the students that an operating leased asset can never be capitalized because we have got logics over there, because we have logics for that, student was silent, fair, because the teacher is telling me that the asset acquired under operating lease cannot be capitalized because the IAS 17 does not allow it. Fair, that would be good. But the student was not satisfied from internal, because the student was still believing that company uses that asset for 5 years at least. What happened back in 2019, in fact back in 2018, IAS 17 was superseded by IFRS 16, and now IFRS 16 is exactly supporting the assumption that was used by the student, which I was personally not supporting, because I was following the standard. I was not following the good game. I was not following the conceptual framework. Now, after some years, we are here that I am wrong and the student was right. But at that point in time, I was right and the student was wrong. What happened actually, that paper P2 was focusing, or earlier we were focusing on treatment specified by the standard. But now in SBR, what practically happened? We got many accounting treatments that were challenged. So examining team of ACCA SBR switched from following the standard to following the underlying concept. What is still happening with students, that students are focusing on the treatment specified by the standard. I would suggest you follow the logics, follow the concepts underlying. Don't just follow the treatment specified by the standard blindly, because telling you very clearly, how can you pass SBR? Remember my wording, how can we pass SBR? The examining team says, if your answer is right, then you're right. Fair? If your specified answer is right, you're right. Dusri possibility, the second possibility is, if you are wrong, you can still be right. Getting me? If treatment of any particular transaction is well specified by the standard, the examiner asked you a question that how should this particular transaction be treated in the financial statements of company, and you did what? You specified with reference to that particular standard, IFRS 2, IS 32, IFRS 9, any particular standard, you specified it well, you pitched it very well, that the standard requires this cost to be treated like that. If you're right, you're right. You'll get your full marks. But your answer may possibly be different from that of the examiner. What happens? What we refer wrong, if an answer is different from examiner's answer, what would you refer it? That I treated certain transaction in way A, while the ACCA examiner in their past answers or the suggested answers has treated the transaction in way B. You'll say that my answer went wrong. But if you're right, you're right. If you're wrong, you're not wrong. You can still be right. What does examining team say? If you justify your answer as what? Remember, this is rule to pass SBR. Reading this wording again, if you're right, you're right. If you're wrong, your answer doesn't match with the students, after attempting your exam, what you got to know that your friends treated that transaction in a different way. and all your friends treated that transaction in a different way. Since you can hear that other 90% students treated the transaction in another way, and you, the 10%, possibly treated it wrong. But you're not wrong. You can still secure full marks. Those 90% friends who attempted it correctly will still get same marks, and you, whose answer was different, can still get the same marks. But what you are supposed to do is simply justify that why did you treated it that way. Hence, my tip is that while studying paper SBR and while preparing and practicing for your June attempt or SBR any attempt, don't be rigid. There are no absolute answers. Entire examining team of ACCA is well trained. They can understand the question deeply. So any student attempting question in its own way and justifies why have I treated that particular transaction that way will secure full marks. What happens normally? That students try to get very rigid, that how should this particular transaction be treated, and they try to find out some absolute ways that this transaction should be treated in this way only. No, that is not the particular only way. Remember, we will not support the team. What we'll support is good game. If you are able to justify the concepts underlying the conceptual framework, the framework is always and still there, but the standards are changing. You do remember we have just got that IFRS 16 leases. So those students who were studying IAS 17, the companies who prepared their financial statements using IAS 17 have proved to be wrong now. So IAS 17 can be wrong, but substance over form cannot be wrong. Remember telling you what? IAS 17 can be wrong, but substance over form cannot. Easy. So you must change your learning pattern. Don't try to get absolute treatments of transactions. Rather, focus on the underlying principles. Do you know what do you want you to achieve? You can observe that SBR is not actually about numbers. True? But it's mainly about discussion. You can observe almost 70 to 80% requirements of SBR ask you to discuss. We can possibly have verbs. You can be asked to discuss. You can be asked to explain. You can be asked to advise. And how many number of questions do you think asks you to calculate? I can bet on this, very few. Very few. What do we want you to be able? What is the aim of this paper? Say, you all passed your SBR during this June 2021 attempt. You'll not no more be in touch with any further financial reporting subject, of course, because this is the full and the final subject of financial reporting of ACCA. After this, you are not supposed to go through any financial reporting paper. Fair? We know the scheme of ACCA. What happens that we get IFRS 18 in practice. We get IFRS 19 and IFRS 20 in practice. How would you learn that what requirements would IFRS 18, 19 or 20 require? We want you to be able to read and understand IFRSs. Since you are student of SBR, we could teach you up to IFRS 16. That's it. But while in practice, you get to know that IFRS 18, IFRS 19 or IFRS 20 have been issued by IASB. We want you to be able to understand how to read the standard, how to read the summary of a standard, and how to understand the accounting treatment. We don't want you to be expert in calculations. So if you are interested, of course, to pass SBR, focus on discussion, not the calculations. Easy? Fair. So coming back to the presentation, but highlighting some areas. If you're right, you're right. If you're wrong, you can still be right if you justify why. Remember, this is rule and this is common assumption and understanding to pass the paper SBR. Do not be very rigid, please. Do not be very rigid to your answer. Student A's answer, if different from student B's answer, can still be correct. These both can be correct. Then I asked you to focus on the discussions, not on the numbers, because SBR does not ask you to calculate. Very rarely, most probably in part 1 of the question, like question 1, section A, can ask you to calculate very few areas, but majority of the times the requirement is to discuss, not to calculate. Fair? So we are supposed to support what? Good game, not the team. Because the team may win or lose. The player may win or lose. You might get very happy or disappointed. But if you support a good game, you'll always be happy. Because any team playing good, any player performing well is what you appreciate. If you've got any questions till so far, you can ask. Otherwise, we are moving forward. Fair. So, done with the introduction, what is the aim of the paper? The examiner wants you to be able to discuss, apply, and evaluate, right? The subject matter of the syllabus requires students to have cohesive understanding of ISB's conceptual framework for financial reporting. Examining team is not expecting you to be expert in regulatory framework. Please note this, the aim of the syllabus is to make you expert of good game, supporter of good game. The regulatory framework may change, but the conceptual framework is seldom likely to change. Fair? So what you must be expert at is conceptual framework, not merely expert in regulatory framework. Okay, going forward, the rest of the part says that you should be able to use the framework basis for judgment in applying international financial reporting standards. In corporate reports. So two things. Initially, as the first part of the syllabus, the examiner wants you to be expert in conceptual framework, and second, and to use the framework as basis for judgment in applying international financial reporting standards. Why does the standard propose or require certain treatment? You must know the concept underlying the treatment. What was trouble with IAS 19? You can observe IAS 19, the employee benefit and its post-retirement plans. The employee is working in a company today. The company is getting services from employee today, but the employee will be getting the payments after he or she retires. And what amount would he or she be getting? We are not sure over this. But matching concept can never be compromised. Matching concept says, regardless of the time difference, that you will be paying employee after 15, 20, or 25 years when he or she retires. We are never supposed to follow the cash basis. We will always be following accrual basis and matching principles. Since company is getting services today, the expense must be charged to profit or loss today, during this year, not when the payment is made after the retirement of the employee. IAS 19 is following which concept? Matching concept. So you must be able to understand, you must be able to apply your judgment. Now this is very important word. I am highlighting this. That students are expected to apply judgment differently from the and still they both can be right. Easy, they can both be right. You'll be marked on the basis of your judgments in applying IFRS's codes. The syllabus considered both the principles and practices. Principles, you are well aware of that accrual principle, that matching concept, that prudence concept, yes, going concern concept, substance over form concept. These are pillars of financial reporting standards. You must excel in these principles, or there are some practices that how industry reports certain financial transactions and uses these principles as a basis for preparation of financial statements of single entities and groups. Can you see anywhere in the aim specified by SBR examining team to tell you to be expert in regulatory framework? No, of course no. There, the requirements and the aim of this paper is to make you expert with conceptual framework. Moving forward, okay, so on successful completion, what are we expecting? The first and foremost requirement is to apply fundamental ethical and professional principles to ethical dilemmas and discuss the consequences of unethical behavior. And you have observed, you must have observed in the past papers, we'll practice it as well, that the ethical consequences are paramount. As an ACCA member or as an ACCA student, as an ACCA affiliate, and in practice, we cannot keep lose control over the ethical perspectives. B, evaluate the appropriateness of financial reporting framework. There is no requirement and no mentioning of regulatory framework. Again, this is requiring the financial reporting framework. Focus on the framework. And critically discuss changes in accounting regulations. Good. Apply professional judgment in reporting of financial performance of a range of entities. Understandable? Professional judgment is what you are required. Your main capabilities must be to apply professional judgment. Please don't be rigid. I'm repeating, don't support the team, don't support the player, support the good game. So you must be able to apply the judgment. All right. D, prepare the financial statements of group of entities. Okay, thank God, some calculations they have asked for at least. So we are supposed to prepare the financial statements of group of entities, but still in SBR we don't get all 50 marks as we used to get in paper P2. There were merely calculations involved in paper P2. We used to get financial statements of the parent and 2 or more subsidiaries, possibly an associate, possibly some disposals, possibly some foreign subsidiaries. But in paper P2 we were supposed to perform the calculations. In SBR we get a scenario, we get its exhibits, and we are supposed to explain and discuss. E, interpret financial statements and communicate the changes in and potential changes in accounting regulations and financial framework. Moving forward, exam structure. I personally think we should not be spending our time here. Because we know this well that we get two sections in SBR, section A, section B. Section A will be testing two questions, one from consolidation and other from financial reporting standards possibly. Then we'll be getting section B, two questions of 25 marks each, right? But don't expect calculations, please. Don't expect calculations that you'll be getting marks for the calculations. No. Rule that I've told you to pass SBR is if you're right, you're right. Don't worry about your different answer. If your answer is different from rest of your friends, if your answer is different from the examiner's answer, you need not to worry. You rather focus while you attempt your paper. Just focus. You must be able to justify. You must be able to do what? Justify that why have you treated the transaction that way. If you can justify that I am right, the examiner will treat you right, right? So justification is important. A quick review of conceptual framework. Do you know what's definition of an asset? That traditionally used to be a resource controlled by the entity, arising as a result of past event, and future economic benefits are expected to flow. If you still remember the same definition, you are outdated. The conceptual framework was initially issued in 89. This was amended in 2010, and just recently in March 2018, new conceptual framework has been in practice. Please make sure you know financial reporting framework, the conceptual framework indeed. Don't assume that this is something not important. This is very important. Merely understanding treatment proposed by IFRS and ISS will not you help pass this SBR. You are to be expert with your judgments and conceptual frameworks. There are 8 chapters. If you knew, good. If you didn't, you must. There are 8 chapters. We'll be discussing on what? 8 chapters. The first one is the objective of general purpose. Remember, whenever we plan to determine the treatment of transaction, ensure the purpose is served. The purpose must be served. Who do we prepare these financial statements for? Stakeholders. The IASB conceptual framework focuses on that these statements are useful to investors, lenders, and other creditors. So you must be keeping in mind those investors when preparing the financial statements. So any information is deemed important and material if it's important for the stakeholders. What are we supposed to report? Chapter number 1 specifies of conceptual framework economic resources and claims. Resources, that what assets does the company have, resources, and claims, what liabilities does the company have. For the year, what changes took place in economic resources and claims? By what amount did the assets increase? By what amount did the liabilities increase? So you are supposed to report the changes. Economic resources and claims will be reported as per statement of financial position, formerly balance sheet. And changes in economic resources and claims will be reported as per statement of profit or loss and other comprehensive income and statement of changes in equity. Financial performance reflected by accrual accounting. This is a route. We cannot compromise with this any way. The financial performance must be reflected by accrual accounting. Please inquire yourself that you know accrual concept very well. Please ensure that you know accrual concept very well. You must be able to differentiate between cash based accounting and accrual based accounting. We can never compromise with accrual concept. Inquire yourself. I cannot ask and you cannot respond me here because this is almost one-sided communication, but inquire yourself, please. Do you know what is accrual accounting? Ask yourself. If you do, write it. Justify. What is accrual accounting? If you don't, please focus on this. There are your SBR will be at risk if you are not familiar with this conceptual framework. Next, financial performance reflected by past cash flows, because we prepare financial statements for historical records for the years ended. We do not prepare financial statements for upcoming years. We do not prepare budgets here in financial reporting for the years ended. So past cash flows. Chapter number 2 focuses on what? Qualitative characteristics. Qualitative characteristics are split into two: fundamental characteristics and enhancing characteristics. Did you know this? If you did, good. If you don't, please focus. Fundamental characteristics primarily are relevance, where we focus on materiality. You are familiar about the materiality concept, what is material and what is not, that omission and misstatement things that will affect the decisions of economic users. Next is faithful representation, that financial statements must be presented faithfully. Enhancing characteristics, we are supposed to try the application of enhancing characteristics to the maximum possible extent. Fair? Maximum possible extent. Okay. Comparability, that accounting policies, if you could recall that in a particular year, if accounting policy was A and in another year the accounting policy B has been chosen, the statements cannot be comparable. We have to make sure the qualitative characteristics that financial statements of one year must be comparable like with another year. Ensure comparability. Verifiability, very important area. You must report the figures, you must report something that is verifiable. Do you know that majority of accounting concepts require us to report the assets and liabilities, incomes and expenses on historical cost basis? Why is that so? When we have got fair presentations, when we have got the fair values, why are we reporting on the cost, the historical cost, that outdated values? Because the cost is something which is verifiable. Fair? The cost is something that is verifiable. We have got an evidence for that. Timeliness, the statements must be prepared on timely. Anything which is late communicated is ill communicated. And understandability, that must not be very complex and should be understandable for the stakeholders. Chapter number 3, statement of financial position will report what? Assets. Inquire yourself, please. Do you know the definition of asset? Can you write it? Ask yourself and respond yourself. What is definition of an asset? What is definition of a liability? And how would you define equity? If you do know this well, if you can write this, you are on the right track. But if you believe that I will define in my language, sorry, you cannot define law in your language. And these conceptual frameworks, these financial reporting frameworks, the terminology used by IASB is law for us. And we cannot define law in our own terms. Please make sure, confirm, do you know how to define asset? If yes, good, write it somewhere. If no, please memorize. Please memorize that definition of asset is something very important for SBR. Liabilities are very important for SBR. The definition of equity is very important for you to understand. If you do not know the underlying principles, you will not be able to apply judgments where the examiner is solely asking you to be judgmental. You must be able to judge. Second, a statement of financial performance, where we are supposed to show the income and expenses. Are you clear over the difference between income and revenue? Revenue is income, income is income. But are there any differences between income and revenue? Ask yourself, do you know that? If yes, good. No, open your book, read it, memorize it, and expenses. Apart from the statement of financial position and a statement of performance, financial performance, we are supposed to prepare other statements about cash flows. You do remember IAS 7, indirect method, operating activities, financing activities, investing activities. Good. Contributions from the shareholders and distributions to the shareholders. Contributions from the shareholders are the issue of new shares, and distributions to the shareholders is dividends paid to the shareholders. The changes in the claims resources of an entity might occur because of contributions from the shareholders as well. Make sure that you know this well. Assumptions, estimates, and judgments used. Chapter 4, in fact 3 is continued. Financial reporting must be for the specified period of time. This is something we have been studying since the day one of accounting, that there is always a year end. So the year if ends on 31st December, that must start from the 1st January, and the financial statements must be prepared for the specified time period, and there must be cutoff. These statements are prepared on the going concern assumption. Ask yourself again. Easy to go with the going concern. What is going concern concept? You know this well? Good. If you don't, read it. Going concern concept. Reporting entity can be single entity, can be portion of entity, and can be more than one entities. And how do we prepare financial statements, and who do we prepare financial statements for? That is for the individual company and the consolidated financial statements. Easy to go. Chapter number 3 was this. Here is the definition of asset. Very compact. How is asset being defined? Present economic resource controlled by the entity as past event. Simple as this. Liability, present obligation to transfer economic resources as past event. Equity is the residual interest in net assets of the entity. What impression does the definition of equity gives? That assets minus liabilities is equal to equity. But remember, this is not that calculation thing. The investors having right over the residual interest, what is left in company behind after paying all the liabilities, is equity. Financial performance, we'll be reporting the income and expenses. What is income? That is increase in assets and decrease in liabilities, excluding contributions from the shareholders. Decrease in assets and increase in liabilities is expense, excluding distributions to shareholders, because the dividends paid to the shareholders are never treated as expense. So that is not expense. The amount obtained from the shareholders, the new shares issued, the funds raised by issuing new shares is never treated as income. Recognition and derecognition. What does recognition mean? Can we include a certain element of financial statements in the statement of financial position? Can we capitalize an asset? Can we capitalize certain cost as part of an asset? Can something be reported in the financial statements? If yes, you must ensure the recognition criteria. If that fails to, or the standard does not allow, if you judge that framework would not allow this to be capitalized, that would be expensed out. So recognition is inclusion of an element in financial statements. If we are including certain thing in financial statements, that is recognition. So what happens? Opening net assets plus income less expenses plus contributions from the shareholders minus distributions to the shareholders must be equal to the closing net assets. You are supposed to show what could you recognize and what couldn't you recognize. What is derecognition? Something that is recognized in financial statements is now supposed to be removed from the financial statements. That is derecognition. Moving forward, chapter 6, measurement. Remember, these are conceptual frameworks, and conceptual framework is general. When a particular financial reporting standard or the regulatory framework specifies the treatment of any item, we must follow what standard says. You do remember, the conceptual framework cannot be valued over the regulatory framework. The regulatory framework wins over the conceptual framework. We have got two main measurement bases. We can record any financial transaction at historical cost. Easy with this. What is historical cost? Number two, current value. The current value means the financial statements must be updated regularly at their fair values. You know what is fair value? IFRS 13. You know what? You must write the terminology used by standards. Try not to use your own wording, because what has been written by IASB is what you must learn. The terms and wordings, the grammar as specified by IASB is something you must use. So fair value, as per IFRS 13, value in use as per IAS 36, you remember, and current cost, that is the realizable value. You do remember in IAS 2, but you are supposed to ensure what? Relevance and faithful representation. Fair? Okay. Chapter 7 focuses on what? Presentation and disclosure. Objectives and principles should be followed, not the rules. Classification can be net off some assets, can be group some assets, can be present some assets and liabilities as single line or not, and separating dissimilar. This is what is specified chapter 7. Can be net off the receivables and payables? Of course not. But we can combine all the trade receivables as a single line, of course. So that is grouping of similar and separating the dissimilar items. Aggregation, we can aggregate, but the aggregation should not be too many and not excessive. Fair. Chapter number 8 and last. Do you know what is financial capital? And do you know what is physical capital? If you do, good. If you don't, please go through it. So don't lose your control over conceptual framework. This is very important. Why do we have the conceptual framework? Right? Why do we have the conceptual framework? This is guidance for the board, the IASB, when developing new IFRS to ensure consistency. There are many cases now, since we are technologically more advanced, we are witnessing some items that are not covered by IASB yet. So the preparers of financial statements, you and me, must be able to understand what, that if IFRS does not provide guidance, the conceptual framework will show us the way out. Fair? If IASB does not have any IAS or IFRS over certain issue, we'll be getting the help and subjective judgment of conceptual framework to determine the accounting treatment, and for all the parties to understand and interpret. Why has the income been shown that way? Why has the asset been shown that way? Right? Okay. Very important area. And this is the only standard that I would be covering for my sessions. IAS 8. Do you know what is accounting policy? Do you know how is the change in accounting policy reported? Do you know what is an accounting estimate? Do you know how the change in accounting estimate is treated in financial statements? Do you know what is difference between accounting policy and accounting estimate? How would you differentiate whether a change is in change in accounting policy or change in accounting estimate? Very complicated area. And there is an exposure draft, we'll be going through it. And correction of errors. Do you know what the errors mean? Let's see. I have mentioned two separate definitions. Please note. The first one is that is existing definition by IAS 8. And there is an exposure draft, which is the current issue. You might be tested in the exam for the June 2021. Accounting policies are the principles. You note that accounting principles, that accrual concept, prudence concept, going concern concept, substance over form. Basis are the measurement basis, historical cost concept, current cost concept, okay, current purchasing power, current cost concept, and then we have got fair values, net realizable values, replacement costs. Do you know what is difference between NRV and fair value? If you do, good. If you don't, please study. There is difference between fair value and NRV. And these are part of the conceptual framework. Rules and conventions. Fair? The main convention is what? Prudence concept. Conservatism. We must be very conservative. We must be very prudent when reporting the financial transaction. And practices. What are practices in industry? How is certain transaction reported by industry? Must be familiar with that. This is the old definition. This was the definition, and this is of course the definition by IAS 8. But since IAS 8 is expected to change by some time, generally what the problem with IAS 8 is, if I am supporting the player and the team, I'm again being proved wrong. Note here, we have been teaching you since quite long that accounting policies are different from accounting estimates. You are always confused. The students are always confused. How can I know whether a change is a change in accounting policy or whether a change is a change in accounting estimate? We kept on following the team, we kept on supporting the treatment, but here we are, IAS 8 is now itself confused. IASB is now itself confused, that practically differentiating accounting policies from accounting estimate is very difficult task. So how can the student learn about the difference? How can the teacher tell How can the tutor tell the difference between accounting policy and accounting estimate? The industry has reported many problems where the difference between accounting policies and difference between accounting estimates is not easily explained. So the proposed definition of accounting policies is specific principles. Let's discuss. I'll be taking your questions now, or you'll be responding me through the questions. How will I know whether a change is a change in accounting policy? How would I know whether a change is a change in accounting policy? Anyone? No, fair. Agnes, I can understand that you are saying that policy is applied retrospectively. Fair. I'm not asking about the treatment. How would you treat the policy? How would you know whether a change is a change in accounting policy? Zayan, you're saying if it is change the method of calculating. So if I change from straight line calculation to reducing balance method calculation, Zayan. Very nice. Samuel, very nice. Samuel says if this affects the presentation, measurement and disclosure. Very nice. Chantel, you are saying if it becomes more useful to the users. Good. This is when you can change the accounting policy. Please understand what I'm trying to ask. My question is, how would I know whether a change is change in accounting policy or estimate? Very nice. I'm getting responses. Specific principles and rules. Demi, nice. Seon, if the change is required by the standard, this is when you can change a policy. I'm asking, how would you identify if the change is a change in accounting principle, a policy or estimate? So that is very nice. You can say if that is required by a standard, that is a change in accounting policy. Very nice. Tasi, nice. Is changing from straight line to RBM is estimate. This is not policy. So the way of calculating cannot be changed in accounting policy. Fair, Hassan. Good. So you're saying the accounting standard is implemented can be a change in accounting policy. Transaction is recognized. Good. Manjusala, fair. Good. From historical value to fair value, Sakib. Good. Zelna, very easy. By looking at the definition. Very nice. Very smart. So we'll be looking at the definition. Good. Nice. Mathinda, I agree. Okay. If a company uses cost model for property, plant and equipment and has now changed to the revaluation model, Arlena, you are saying that change in accounting estimate is the judgment in the useful life, not merely. You cannot specify a case. Tell me a general guidance. Leon, if you wish to respond a question, simply ask a question. I'm doing what that I'm treating your questions as your answers. Aaron Joseph, very nice. Okay, coming back to my question. Company chooses a change from cost model to revaluation model? Leon, you cannot see others' responses. Change in accounting policy. Sarmad, you're saying method of presentation change like cost to revaluation subjects. Okay, good. Sarmad, very nice. Zayan, policy, good. Very nice, Demi. Oh, Najib, you're saying this is change in accounting estimate. Finally, Sayed Shahsab, perfect. You're telling it perfectly well. This is changing policy. Okay, but interestingly, your judgment is correct. Interestingly, your judgment is correct. But change from cost model to revaluation model is a change in accounting estimate. Sorry, it's estimate. This is not accounted for retrospectively. There is an exception in IAS 8. Dhwani, you're telling it well, that how should the policy be accounted for? Focus on the question. Dhwani, I'm asking the question that how would you diagnose whether a particular change is change in accounting estimate or change in accounting policy? Hamza, very nice. This is specified by IAS 8. So this is an exception. So far your judgment is concerned, you are correct that changing from cost model to revaluation model is change in accounting policy. But this is what has been specified by IAS 8, that change from cost model to revaluation model is treated as an estimate. Very nice, Mojusla, telling it again. Your judgment is correct, but your answer is not. You'll still get full marks. If you're right, you're right. If you are wrong, you can still be right. This is specified by IAS 8. Okay, changing from FIFO to AVCO, IAS 2, inventory valuation. Changes from first in, first out to average costing, policy or estimate? Zayan, policy, good. Okay, mostly you're telling me it's policy. Mojusala, can you clear your question? Why is this policy? What are you asking about? The change from FIFO to AVCO? Good, Ola, you're correct. The book writes that as per IAS 16, the cost model is policy and revaluation model is policy. But as per IAS 8, that change is in policy is treated as change in accounting estimate. Sunny, as for your judgment, Sunny's question is that how change from cost model to revaluation model is change in accounting estimate. So far your judgment is involved. The change from cost model to revaluation model changes the measurement basis of an asset. So that is actually a change in accounting policy. But this is particularly specified by IAS 8. The change from cost model to revaluation model will be treated as change in accounting estimate. Exception, there is an exception. The judgment is correct, but there is exception. Oh, Mochala, LIFO is not involved, not allowed, but changing from FIFO to AVCO is a change in accounting policy. Why? Because there are three main areas: the measurement, recognition, and presentation, right? Measurement. Yes, both Salo. This is specifically specified by IAS 8. Yes, Hamza. If you change from FIFO to ABCO, you have to apply it retrospectively. Hassan, if any change results in change in measurement, measurement doesn't mean the net book value or calculations the way it's performed. Sakib, you have written the treatment of asset under lease with IAS 16. Yes, good. What's your question in this? You are doing it right, Methinda. This is the way to respond to your questions. Although this is actually the portion to ask the questions, but we don't have the chat box. So you can use this question section to respond my questions. Fair, you're doing it well. You're doing it well. Okay, because you have put in question mark, Sakib. That's why I asked. Fair. So if any change results in measurement like historical cost, to current cost, this is typically a change in accounting policy that you have that is what your people have been judging, that if we change from cost model to revaluation model, this will change the measurement basis from historical cost to fair value. So that should technically be a change in accounting policy, but exempted by IAS 8. Next, Russell, depreciation. There are three areas. I'm coming to that. I'm coming to your question. There are three areas which are mainly change in accounting estimates. Presentation. What if I, Tasi, current cost has three options. Let me show you again in this PowerPoint file. Okay, see this. Tasi, your question is NRV same like current cost? You can see measurement basis have two main. One is historical cost, other is current value. The current cost has three options. Fair value is the market value at which the price that would be received to sell an asset or paid to transfer a liability. Value in use is discounted present value of estimated cash flows, and current cost is NRV. Yes, coming back, Ola, we are coming back to that. See this. If any change results in the change of measurement basis, historical cost to current cost, that is measurement basis. Presentation. What if I used to charge depreciation to cost of sale earlier, and from 2020 onwards I'll be charging depreciation to admin expenses? Up to 2020, I have always charged depreciation to cost of sale in my statement of profit or loss. But from 2020 onwards, I'll be adding depreciation under the heading of admin expenses. Is this a change in accounting policy or estimate? Glory, your question is that we can use the mix of measurement. Remember, the consistency must not be compromised. Consistency must not be compromised. So if you are treating one measurement basis in 1 year and other measurement basis in another year, that is change in accounting policy and must be applied retrospectively. But for different items, different measurement basis can be used. Intangible assets can be treated at historical cost, financial assets, biological assets, property, plant and equipment, investment properties, inventories, these can be carried at different measurement basis. So those telling me that this is change in accounting policy are correct. This is changing the presentation. So as an example, I am changing the category of presentation. Glory, you have asked, can I use a mix of measurement in for different transactions in particular year, or I need to use only one measurement basis? I'm telling you, different assets can be carried out at different measurement basis. Property, plant and equipment under IAS 16 can use cost model or revaluation model, but same class of asset must be carried at same policy. Intangible assets can be carried at different measurement basis. Investment properties under IAS 40 can be carried at a different basis. IAS 41 biological assets, IFRS 9 financial instruments, IAS 2 inventories, you for the same year can use different measurement basis for different assets. The same class of asset must use the same basis. Cannot. Good. Bocello, good. Ryan, true that. Should be consistently applied to the class of asset. So if you are carrying properties, then all properties must be carried at fair value revaluation if one property is carried at revaluation. But different assets can be carried for the same year at different measurement basis. If it's still not clear, Glory, you can ask. Fair. So Zayan, Pooja, Sabina, all right. Ola, Aparna, you're all wait. Sorry, no. Aparna said this is estimate, and Ola said this is estimate. Those telling me this is estimate are wrong. Changing from FIFO to EBCO is change in accounting policy. So presentation. So measurement change and presentation change are normally changes in accounting policies and classification. Say earlier I used to show something as revenue, but I'll be reporting that income now. Or earlier something was being reported as liability, and now that would be reported as an equity, and vice versa. Zafar, you're right. Changing from FIFO to weighted average is an accounting policy. On what do you mean by error? Good. But now IAS 8 is facing some problems. IAS 8 is now focusing to the cost benefit analysis. No, Pires, these three changes are regarded as policy changes. Hola? If any change affects the measurement basis, if any change affects the presentation, and if any change affects the classification, these are changes in accounting policies. Sarah, anything that will not affect the measurement, presentation, or classification is a change in accounting estimate. Normally, estimates are as per IAS 16, residual value is change in accounting estimate. Change in useful life is change in accounting estimate. And pattern of economic benefits is change in accounting estimate. If we change the residual value, the asset was earlier carried at net book value. Yes, Glory, anything that does not change presentation, measurement, or classification. This is not and or classification. Impact on any of these three, fair, impact on any of these three will be change in accounting policy. Yusuf, I'll be sharing further notes for the rest of the sessions. There are further, or I'll be sharing on WhatsApp. Hamza, pattern of economic benefits mean if the asset is expected to discharge benefits in same way each year, straight line, or the benefits would be more for the initial years and declining for the next years, pattern means how is asset expected to discharge its economic benefits. Yes, Amina, I'll be sharing this on WhatsApp. I'll be getting PDF of this by the end, and I'll share these notes with you. Okay, Hamza. Do you remember that has IAS 17 ever mentioned name of depreciation method? Does IAS 16, sorry, Dione, I have shared the link to the WhatsApp group. That's in the PowerPoint presentation. You can simply click the link and get access to the WhatsApp group. Hamza, no, that is not case. We normally use RBM. IAS 16 simply says IAS 16 does not specify. Sure, Hassan. I'll be sharing these files with you on the WhatsApp group. That would be easy way of communication. So IAS 16 simply says that the company must ensure that asset is depreciated as its economic benefits are discharged. If the asset discharges same economic benefits every year, the company should follow a straight line. But if you believe that initial years would be getting more benefits and subsequent years would be getting less benefits, then you'll be switching then you'll be charging RBM or any other method. IAS 16 does not know what is the straight line, what is reducing, what is sum of digits, what is number of units, what is number of hours. IAS 16 has got no idea. What IAS 16 simply know is the pattern in which the economic benefits are discharged. This is a very complicated area where we are supposed to apply the judgment. How should a particular transaction be treated? Great, Hamza. Revenue-based depreciations are prohibited by IAS 38 and by IAS 16. Revenue-based depreciation are prohibited. Good. Fair. Moving forward, how can we apply? Remember one thing, we were discussing about this. I'll be sharing this with you on WhatsApp. And let me share the link here by the end of this webinar today, right? You can get the link copied from here. Or if you could spare me a minute, I can share a link here to everyone. Spare a minute, please. Because the WhatsApp does not allow the link to be shared later. If any student joins later, will not be able to access the files. See if you could check the link in the answers section. I have pasted here. Sure, Daniel. Would be a bit time consuming for me to answer the private messages, but fair. I spent some time tonight, in fact. Focusing on the complicated area. Changes in accounting policies. IAS 8 is very confused that how should the change be accounted for. Mainly, the issue being faced by IAS 8 is cost benefit. So something that is not cost beneficial, even if that is a change in accounting policy, but retrospective change is very costly, so that it is exceeding the benefits expected from the change to be accounted for retrospectively, IAS 8 will allow exception for the changes in accounting policies to be reflected as change in accounting estimate and prospectively accounted for. But this is an exposure draft. This is not sure yet. Then changes from FIFO to EBCO is a change in accounting policy. I agree. But retrospective change is not cost beneficial. Like the case from cost model to revaluation model, what IAS 8 is now trying to focus on, the IAS 8 should not be general anymore. IAS 8 should not be general anymore. We are trying to focus on specific examples and specific principles. So what IAS 8 will be doing in near future, that IAS 8 will be providing certain examples that would be treated as a change in accounting policy, and rest would be treated as change in accounting estimate. Something we discussed today, from change from cost model to revaluation model, judgment says that this is a change in accounting policy, but IAS 8 has specified this is not a change in accounting policies, this is applied prospectively. Same case that is being discussed under the meetings of exposure draft 2018-1, that changes from FIFO to EBCO is logically a change in accounting policy, but retrospective change would not be cost beneficial. So IAS 8 in near future would be allowing FIFO to EBCO to be accounted for prospectively. What we are going through, you should read the article by ACCA. I'll be sharing the link in PPT. Specific principles, measurement basis, and what? Industry practices. These three things. Earlier, there are 5 elements: principles, right? Principles, rules, basis, conventions, and practices. There are 5 elements. But since IAS 8 is expected to change, is supposed to change, there would no more be 5 items to be classified as change in accounting policy. The policy will be comprising of 3 elements: specific principles, measurement basis, and practices. 3 things, right? But this is the change that is expected to occur. You must be updated, because this will help you to write an answer. If we face an issue that we face a certain financial transaction or certain investment where IFRS does not provide us any guidance. Hamza, this might, but you cannot change the accounting policy frequently. You do know this. The changes in accounting policies are not allowed to be very frequent, but this would not be cost beneficial. The benefit I'm talking about is the benefit to the investors. Farid, very nice. If we are facing a transaction that is not, treatment of which is not covered by any standard, how are we supposed to get the way out? Hassan, we have not shared the notes shared. The PPT is shared on this handout section of this webinar, and rest I'll be sharing on the WhatsApp group, the link I have provided. Okay, coming back. If you face a financial transaction which you are supposed to report in your financial statements, you'll initially be required to see if there is an IAS or IFRS or interpretation. Your generation would of course be following this cryptocurrency and Bitcoin thing. You heard a tweet, you read a tweet and heard the news that Tesla, Elon Musk announced that we have invested $1.5 billion to buy Bitcoin. How do you think should cryptocurrency be reported in financial statements? You'll see if there is an IAS or IFRS or interpretation. Do we have any IAS or IFRS dealing with the treatment of cryptocurrency? Anyone? Very nice. Good. Who is this? This is Tasi. Tasi, very nice. You are telling me that this should be accounted for under IFRS 9. Interestingly, your answer as per ISS is wrong. But I'll grant you full marks. I'll give you full marks. Good. There is no standard covering this. IAS 38. IAS 38 does not cover so far. There is no standard, Sali. Very nice. There is no standard, Amna. Good. But Sharik, very nice. Mostly of you have read somewhere or may possibly have gone through the article issued by ACCA that cryptocurrency should be treated as per IAS 38. I object. I personally object. I don't allow this. I don't follow this. Although there is an interpretation now. There is an interpretation now. I'll explain to you, this to you later. Very nice, Mir Zafar. I appreciate. IS 21 may cover it because this may be treated as a foreign currency. Very nice. This may be. We all might be coming up with different answers and we all may be right. If you are right, those students in examination who will mention that cryptocurrency must be accounted for under IS 38 will be getting full marks. But those telling me that IFRS 9 should be applied, those telling me IS 21 should be applied, will still be getting full marks and telling you very confidently. Hamza, very nice. IS 38 has the drawback. Good. So coming over this, what does IS 8 says over this? If you face any transaction where you will have to see that is there any IAS or IFRS or interpretation dealing with an issue. Mohammad Safi, derivative is something different. As you know, three characteristics of derivative: nil or negligible initial investment, dependent on host contract, and future settlement. Cryptocurrency is not short term, so this cannot be treated as derivative, but FETPL makes sense. Coming over, if standards are silent on the treatment of any transaction, how would you do? Management need to use judgment for treatment. Judgment has an hierarchy. Number one, Sakib, makes sense. Makes sense. Sakib says this cryptocurrency can be used as cash and cash equivalent. Makes sense. We'll have to discuss. As per SBR question, you are not supposed to tick any correct answer. There is no MCQ and there is no absolute answer. If you can justify why should crypto be treated as cash and cash equivalent, I'll grant you full marks. Dhwani objects. Dhwani says that this cannot be treated as cash. I grant you full marks, Dhwani. Justify. If you're right, you are right. If you're wrong, you are still right. Justify. Those telling me that cryptocurrency should be treated as IS 38 are correct. Those telling me cryptocurrency should be treated as IFRS 9 are correct. Those telling me cryptocurrency should be treated as IS 21 are correct. Those telling me cryptocurrency should be treated as cash and cash equivalent under IS 7 are correct. But justify. Those who cannot justify but are right will not be getting marks. Very nice, Samuel. We cannot treat this as cash and cash equivalent because cash and cash equivalent has what? Two main characteristics. Should be highly liquid and should be risk free. Should be highly liquid and should be risk free. So the discussion is going well. This cannot be treated as cash and cash equivalent, but your discussion will get marks. Your conclusion is not very that important. Chantal, very nice, Andrews. It is not regulated. This is DeFi. The crypto market is DeFi, the decentralized finance. This is not regularized, so there is no collateral and there is no counterparty. Yes, George. So the discussion is important, and focusing on IS 38 was not the ultimate, was the conclusion, as interpretation committee has already said. But what I'm asking you to focus on, go through constructive discussion. There are no absolute true and falses. There is no, we are not supporting the player or the team. We are supporting good game. Your discussion matters. Your conclusion does not. Yes, Zali, we'll be dealing over crypto later in this presentation. Tasi, perfect. This cannot be dealt. What I'm telling you, everything that you're specifying will get full marks because your conclusion is not important. Your discussion is. Sorry, I'm facing trouble to pronounce your name. Mahaganapati, I believe. Mahaganapati. I'm sorry for my reading, but you will have to justify your answer. Say, you said that cryptocurrency is very similar to foreign currency, but foreign currency has a central bank, and currency is something that can be accepted as an exchange for the goods or services. So far, crypto is not well accepted by vendors for the goods or services. So what you said, you started planting your answer that crypto should be dealt with as a currency. Good, but you started discussing that can this be a monetary asset or can this be a non-monetary asset? Can this be treated as a foreign currency? For all foreign currency, there is a counterparty. There is an issuing bank. In case of crypto, we don't know where the Satoshi Nakamoto is, and cannot, of course, be held responsible, cannot be regulated. Rehan, no. Currency has no got physical existence, please. Currency is an intangible asset. You cannot say this as a physical substance. Well, we'll be discussing. This will take too long. This will take too long. But the discussion is very constructive. Remember, if the standard is silent on treatment of any transaction, first we'll have to see, are there any similar standards dealing with the same issues? So how does cryptocurrency look like? Is that a financial asset? Is that a foreign currency? Is that a monetary asset? Is that a cash equivalent? I'm telling you, no one is wrong. You will start planting your answer and start justifying how would you treat or why would you treat the cryptocurrency as a foreign currency. If you can justify your answer, good. Should the cryptocurrency be dealt under IFRS 9 financial instruments? Possible. There is possibility. If you can justify, you'll be getting full marks. Currency is not a non-current assets. Good. So how would you come across? Number one, do we have standards dealing with this similar issues? Yes, Bilal, you can put on your question here. If there are no similar standards dealing with this, you will check the conceptual framework. I'm telling you to be very strong with the conceptual framework, please. This is what will help you develop constructive discussions, the conceptual framework. If you cannot get the way out, Sayed Bilal, if you are asking about the cryptocurrency can be treated as under IFRS 9 FVTPL. You can justify measuring cryptocurrency as FET OCI. You can carry cryptocurrency treat under IAS 38 revaluation model. The revaluation of IAS 38 is very similar, is ditto copy of IAS 16. Of course, Bilal, can I treat gold as cash equivalent? Anyone? Can we treat gold as cash equivalent? Waiting for your answers. Zayan says yes. Can we treat gold as cash equivalent? Yes, no, yes, no, 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 yes, 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 no, yes. Hamza, this does not meet any equity or debt liability. Very nice. No, highly, it's not. Why not? Irfan, gold is highly liquid. Why isn't gold highly liquid? You can get gold converted into cash at any time you wish. Kiru, it's how can't you liquidate gold? Dhwani, very nice. Hamza, very nice. Ola, yes, this is very readily convertible into cash. But gold cannot be treated as cash equivalent because cash equivalent has, yes, Sabina, very nice. Cash equivalent has got two characteristics. Number one, highly liquid, convertible into cash. Number two, the value doesn't fluctuate. Bilal, good. Yes. So gold cannot be treated as cash equivalent because the value changes significantly. They are convertible into cash. Yes, Rishal, true. What about ordinary shares of company? If I own ordinary shares of a company and these are held for trading, can I treat ordinary shares held for trading as cash equivalent? Please discuss. Why not? Sakib, Dhwani, why not? Harshan, why not? Very nice, very nice. Since we are discussing that value, its value changes. Daniel, you cannot say this. Daniel says that these are held for long term. No, that is choice of the company. The company can hold the ordinary shares for trading purposes. Why not? Okay, I missed the name, but someone answered that if the value doesn't change, this can be. How is this possible that the value of ordinary shares cannot change? Rachel, no, the gold is not cash equivalent. and ordinary shares are not cash equivalent. But simply telling examiner this will get you 0 marks. You will have to discuss about the gold, what gold is, how is it sold, how is it purchased, how is it valued, why is it purchased, what is the characteristics, what are the characteristics of gold, and where this can be classified, and you can draw a conclusion. Good, Mir Zafar, bilkul, like you're correct. The shares cannot be treated as cash equivalent because their shares, the price changes, there is volatility. Great, great, fair. So case number 1, if there is any standard dealing with the treatment, you'll follow that. If there is no such, you'll follow similar standards on the similar issues. If there are no such, you'll go towards conceptual framework. If you cannot get a guidance, you can get a guidance from other standard setting body like US GAAP. If there are US GAPs specifying the treatment of crypto, gold, or something, then you can use that as well, or the industry practice most important. Pires, we'll be coming towards these. I have set some questions, and I'll be structuring the questions, the answer. That's a good idea. So we'll be writing the answer. Let me come over the issues specifically. Sabina, we'll discuss it. There's an absolute answer, although I'm telling you privately. Don't tell anyone else. But we'll be discussing this. I've sent you the answer privately. Coming over, see this. I've formed a question. Game of Thrones fans over there. I'm one of them. I started watching Game of Thrones again, and I've reached season 7 now. Okay, so I've named all the questions as Game of Thrones because I was watching Game of Thrones throughout. So the names I was getting in my mind, I kept on making the questions with it. Amina, gold can be treated as, let me send you privately. I'm not going to disclose it because we'll be writing the answer. Okay, so I've answered you privately, Amina. Amna, I guess. Amina, okay. Winter's not coming there, shall correct. Marine Limited raised funds for the business operations by issuing 60,000 8% convertible $100 convertible bonds at par. Easy with this? Okay, let's do one thing. This would be very comfortable for us. In fact, theoretical answer. So let's use Word for this. Keep answering, but I'll start asking some questions now. Let's see how do you respond. Marine Limited, remembering Daenerys, Stormborn, Khaleesi. Marine Limited raised funds for business operations, issuing 60,000 8% $100 convertible bonds at par on 1st October. Rachel, good. How much fund has been raised? Can you someone perform the calculation, please? 60,000 bonds into $100 each. So company has collected amount of 6 million. Thanks, Aryan. Thank you, Shakib and Sunny. Safi, very nice, very nice. Your answer is perfect, Safi. Bonds are redeemable at 9.282% premium. Please calculate the value. Redeemable at how much? So 60,000 bonds into $100 each and redeemable at 1.0928%. 6556920. Thanks, Irfan. 6,556,920. I love the student who used these commas. A good strategy. Okay, so company has issued bonds that are redeemable at premium on 30th September 2022. How long is maturity period? Agnes, I am adding the principal as well. If you are applying only 9.282%, you'll only be getting the premium. So the investors will be getting premium plus the par. Right? Clear? It's 1.09282 because investors will be getting $1 as $1 as par and 9% as premium. So this is 109.282%. Let's calculate. Don't be silly on this. I'm getting multiple answers, 3 and 4 years. This is very easy. You should not have different answers. It's October 2018, 30th September 19, 20, 21, 22. Very easy. 4 years. If you had made this mistake of treating this as 3-year loan in your SBR, you would have spent 3 months to get it corrected for the next session. Maturity period is 4 years. Yes, also the financial loss. 3 months time to correct and with the financial loss. Okay, so it says these can be redeemed at premium or these can be converted into ordinary shares. Now it specifies that this will be converted into variable number of shares. How many number of shares? We don't know. Very nice. Mohammad Ahmed, very nice. And variables, Aryan, good. Sunny says, here the split accounting would not be followed because the conversion is not fixed. Number of shares. Therefore, the same would be treated as financial liability only. Very nice, Sunny. Bilkul. You are correct. You are correct. But we cannot answer it that easily. Things are not that easy in SBR. We'll start mentioning about IS 32 that deals with the definition of financial assets, financial liabilities, and equity, right? Okay. Thanks, Sunny. Okay, so IS 32 clarifies the definition of financial assets, liabilities, and equity. Uh, who of you can tell me the definition of financial asset? Aparna, what do you mean by cash? No, no, no. Don't start writing, Sarita. I'll provide you this. I'll share everything I'm doing here today. Right to receive cash. Contractual right to receive cash. Contractual right to receive cash. No, no, not satisfied. Good, Sakib, very nice. Uh, Financial asset or financial instrument, simply if we explain, is agreement or contractual arrangement that gives rise for financial asset. So that gives rise to financial asset for one entity and financial liability or equity for another, right? It is not right to receive cash only. Very nice, Tasi. Under the conditions that are potentially favorable. I have structured its answer. I have structured its answer. So since this will be taking too long for me to type the question, the answer, I'm stopping my screen sharing for just a while, and I'll be showing you my answer that I have constructed myself. You can challenge it. Visible? I have copied it from the article as well. How would you start writing this? Your answer, your conclusion may be correct, but you'll not get marks for the conclusion only. You'll be getting marks for discussion. Good. It says IS 32 clarifies the definition of financial assets, financial liabilities, and equity. In doing so, it helps to eliminate any uncertainties when accounting for these financial instruments. The objective of IS 32 is to establish principle for presenting financial instruments as liabilities or equity and offsetting. The classification of financial instrument by issuer as either date uh, let me know, is this is my screen visible? Well, I have got a message for scrolling up. But chalo, is it correct now? Visible? Fair. The classification of financial instrument by the issuer as either date or equity, because the confusion here in the question of Marine Limited, you can see accountant is unsure about split accounting. This part is to confuse you, because you might start explaining accountant about split accounting. How do we split date and equity? Because When a company issues convertible bonds, loan notes, or debentures, these are usually split into debt and equity, right? But where the number of shares are variable, this will not be classified as equity at all. But you cannot answer that way. Bit larger, zoom in. Isabel? Yes, Mohammad Safi, this is what we are doing now. This is what we are starting. You should discuss. So you started specifying that IAS 32 does the trick, because we were reading through our presentation here. How should we deal this? Is there any standard dealing with this? Amina, I'm saying that if the company is supposed to convert the date into fixed number of ordinary shares, repeating, if the issuer is supposed to convert bonds or loan notes or date into fixed number of ordinary shares, that applies the split accounting. That is split into date and equity. But if the number of shares are variable, that are dependent on the fair value of shares, the entire proceeds are supposed to be treated as liability. Please be clear over this. Heard well, Amina? Rina, very nice. A contract that will be settled by equity. Very good. If you could write this in your exam, if you have copied it from somewhere, Rina, the answer is perfect. The answer is very perfect. But you need to make sure you can answer, you can type this and answer this in your exam attempt. Irfan, you can cut it short, of course, because I got enough time to respond it. I got enough time to think over this, and this was the only question that I was supposed to attempt. Okay, let me see if I could copy this. Uh, no, I'm not able to copy this, but her answer is very similar to mine, Reena. Sorry, Amina. No, I'm not able to copy this. Yes, I am. I am. I sent you the answer. Fair. So you'll first look, okay, that is there. This will take a bit long, Amna, if we start reading this. I guess I've shared it. Getting here. The key feature, okay, the key feature of it, if you don't mind, can I have this, please? Fond of mangoes. The key feature of date is that the issuer is obliged to deliver either cash or an other financial asset. This is the key feature to identify whether the fund should be treated as, yes, this is Sindri mango, very yummy. So the key feature is whether the company is supposed to deliver cash or another financial asset. Here the problem we are answering is that whether shall we show this fund as debt, equity, or split accounting. Explaining the contractual obligation may arise from requirement to repay principal or interest or dividends. Can you respond? Do we show preferred shares as debt or equity? preference shares issued by company, is that debt or equity? Debt, equity, mostly equity. All going wrong for so far. Yeah, Hamza, you are perfect. Sayyid Irfan, perfect. Amna, close. Zainab, perfect. Those telling me it's date are wrong. Those telling me it's equity are wrong. You need to discuss. There is no absolute answer. Amna, perfect. Remember, preference shares are classified as two. One, preference shares are redeemable and other are irredeemable. Remember? Good, Sarmad, Khalid, good. If the preference shares are redeemable, the company is obliged to deliver the cash. These are treated as liability. Samuel, perfect. If these are irredeemable, the company is not obliged to pay the cash back. That is treated as equity. Getting my point? There are no absolute answers. You'll have to justify. Hafsa, paying annual dividend in either case is obligation, of course. Even if the shares are redeemable or irredeemable, the dividends on preference shares are in either case to be paid. So the dividends, unpaid, accrued dividends can be reported as a liability, but the principal amount obtained is not surely a liability. If the company is obliged to pay the principal back to the investors, that is a liability. But the investors are, if the company is not obliged to pay investors back their principal, that is an equity. But the dividends accrued are always liability. William, uh, if these are redeemable, you are correct. But in case these are irredeemable, since I did not specify in my question, when I asked you a question, I did not specify whether I'm talking about redeemable or irredeemable. That makes sense. You should cover both areas. Easy? So whether something is a liability, debt, or equity depends whether there is a requirement to repay. Safi, in case of irredeemable preference shares, how come are you supposed to pay the principal back to the investors? In case of irredeemable preference shares, are you supposed to pay the principal back to the investors? Investors can sell in the secondary market. We are not obliged to pay them back. By song, I'll be sharing by the end of this webinar. I personally believe that a webinar should be very discussive. I don't want to finalize and complete my presentation. This is not my task. I want to keep it very interactive. If you're talking to me, I'm talking to you. This is what is helpful for me, I believe. So I have the pattern of 4 questions. I have made some questions by myself, but keeping it interactive would be very interesting, I believe. But I'll be sharing the agenda. Bilal, if, of course, in either case, either the shares are redeemable or irredeemable, issuer is obliged to pay dividends to the investor in any case. If your dividends are due, but you haven't paid so far, the accrued dividends are supposed to be reported as a liability. And do you need one? I've got the mango shake. I can share. Sure, Ola. Sure, Ola. I'll be sharing this. Amina, yes. Good. I find it very interactive, and I enjoy teaching this way, that there must be something answering. I must not be teaching to the walls, beyond the wall. Hamza, it's almost end, but I've got plenty of mangoes here in Hyderabad. Sorry, Arina, is Kessar any student with us? All right. Ola, I wish I could share, but if this could help, the empty glass, you can show her. Safi, bonds, loan notes, debentures have the priority. Preference shares have the priority. Ordinary shareholders are prioritized in the last. They'll only be getting what is left. So preference shares are treated as liability if they are redeemable. In case of irredeemable, we have not promised investors to pay their principal back. I never promised. I said these are irredeemable. You can get your funds back from the secondary market. But from me, the issuer, irredeemable shareholders will not be getting a single penny of their principal back. Yes, in case of liquidation, they might be getting something, but they have got the residual interest. What is left behind? They'll be getting what is left behind. Final sip. Thanks to my wife. Enjoyed it. Well, moving towards answer. What is the financial liability? Since we are here in a situation where we need to make sure whether these convertibles are supposed to be treated as a liability or equity or compound instrument. I have written the financial liability is any liability that is a contractual obligation to deliver cash or an other financial asset to another entity. Ordinary shares. Are ordinary shares a financial asset or not? Rina, come on. Ordinary shares are financial or non-financial? Bilal, I'm coming back to your answer, to your question shortly, because I'm getting many answers. Yes, these are financial. So what the definition of liability is specifying, that if there is an obligation to deliver cash or another financial asset. Generally, what we understand, that financial instrument is any contract where the dividend is not compulsory, of course, but financial asset. What does financial asset mean? Financial instrument is any contract that gives rise to financial asset for one entity and financial liability or equity for another. If we acquire financial ordinary shares of a company, these ordinary shares are financial asset for us and equity for another. These are equity instruments, fair, but are these financial instruments? Yes. Safi, your answer is telling me, or in fact provoking me to start a new discussion. That would be time consuming, but I feel comfortable. What's difference between financial asset and monetary asset? What is difference between financial asset and monetary asset? Anyone answering would be the student of the hour. Mm, no, Zayan. Monetary assets are not physical. I'm not talking about the non-monetary assets, monetary assets. Rina, it's same. Amna, I was telling that ordinary shares are a financial asset. Financial asset is what? Is any asset that is asset for one entity and financial liability or equity for another. If I acquire ordinary shares of entity X Limited, these would be investment for me and share capital and share premium for entity X. That's all. Since ordinary shares are asset for one entity and equity for another, so that these are financial assets. And financial liability is a contractual obligation to deliver cash or another financial asset, can be ordinary shares. If I have got the obligation to deliver ordinary shares, that is also qualifying the definition of a liability. Sarmat, not satisfying. Monetary assets, please. Spare me a minute. Let me go through the questions. In fact, the answers. Gives you the right. Okay, monetary asset or physical? No, same. Zayan, can you please elaborate your answer? Sorry, Mojusula, not satisfied. George, not satisfied. No, Peter. Peter Bashir. Oh, Peter Bellish. Osman, you are very close, but monetary assets are assets that have a fixed determinable currency units. Fixed determinable currency units. Hamza, yes. Good, Hamza, your answer is correct. In fixed determinable currency units. Ordinary shares. As an ordinary shareholder of company, will I get a fixed determinable dollars or currency units from a company? Will I get a fixed determinable currency from the company or anywhere? No. Ordinary shares are non-monetary assets. Ordinary shares are non-monetary assets, but financial. Yes. Rina, correct. Share prices fluctuate, Sabina, true. Plus, see, dividends as well. Plus, these are irredeemable. There is no fixed value. Even if the par value, which the Securities and Exchange Commission has determined, is not guaranteed, the value of the shares can go to zero. And the investor of the shareholder cannot get a fixed amount of currency at like in any case. Sunny, monetary assets and non-monetary assets. You are asking me to quote some examples. Non-monetary assets are assets where there is no determinable currency units receivable. There are no determinable currency units receivable. Like if I obtain bonds whose par value is $100 Sunny, the dividend is not an asset, neither a liability. Dividend is distribution. If you have not paid the dividend, if you have declared the dividend but haven't paid yet, then this is a liability. But the dividend in itself is not an asset. So we cannot classify it as monetary or non-monetary. If I have obtained bonds of a company whose par value is 100 and redeemable at 100, can you tell me how much amount will I be getting at the time of redemption? Yes, $100. Since the value is determinable in currency units, then the bonds are monetary assets. If I have sold goods worth $100,000 on credit, can you tell me how much amount the customer is supposed to pay me? Of course, $100,000, the invoice price. If the amount or the value of asset can be in the fixed determinable currency units, that is a monetary asset. That is a yes, Zayan. The loan is a monetary asset because you have specified the amount that you'll be getting or the amount that you'll be paying. Yes, Sabina, redeemable preference shares are monetary assets. Bilal, fixed determinable currency. If ordinary shares in the stock market are trading at $15 per share today, you have got ordinary shares. Will you at any point in time get $15 per share? Please clear the confusion. Majority of students tell me that any asset that can be measured in monetary terms is monetary asset. Come on, this is never the case. If this was the case, any non-monetary asset must not have been recorded in the balance sheet. Monetary asset is an asset that guarantees a fixed determinable currency unit. Fixed determinable currency units. Cash is a monetary asset. Bonds are monetary asset. Redeemable preference shares are monetary asset. Trade receivable is monetary asset. Not an issue, Safi. If you wish to sell your bonds in the secondary market, you can. But the issuer has guaranteed you $100. If its value has been guaranteed by the issuer, that is a monetary asset. You can sell it at a profit or loss. But if you don't sell, if you hold, you will still be getting $100 in any way. Clear? Whereas non-monetary asset does never guarantee, non-monetary assets does never guarantee fixed determinable currency units. I quoted an example of ordinary shares. Inventory is non-monetary, property is non-monetary, intangible assets, software, brand, mastheads, non-monetary. Yes, PPE is non-monetary. All tangible assets are non-monetary. Be very clear. All tangible assets are non-monetary. Yes, Hamza. Investment in debt. When you have guaranteed determinable currency units receivable from the issuer, that is a monetary asset. When the issuer does not guarantee you determinable currency units, it is non-monetary asset. It can be financial though. It can be financial though. Financial is asset for one entity, equity or liability for another. Cryptocurrency, very nice. Who guarantees value of the Bitcoin? The Bitcoin, upon a tweet of Elon Musk, raised above $66,000 and it was trading at $34,000 a day back. If you have a Bitcoin, let's say, wish a complete Bitcoin, a whole Bitcoin, if you own one, who guarantees you the value? Will you be getting a determinable value of a Bitcoin? Yes, Avinash. Cash is both financial and monetary. Good. Zion, that is faith of people. But you do not have guaranteed. Satoshi Nakamoto is not going to get you a determinable amount of Bitcoin. So the cryptocurrency is definitely non-monetary. Definitely non-monetary. In case you sell, Safi, if in case you sell, there is no counterparty guaranteeing you the amount. Same is the case with ordinary shares. You can check this price in ordinary market, stock market. The stock market can tell you at what price can you dispose the share of in the stock, but guaranteeing the amount. This amount can fluctuate. When you are checking the market and when you are deciding to sell it, the value might fluctuate. There is no guaranteed determinable fixed currency units. That is a non-monetary asset. Ola, that definitely can. That definitely can. But this can fall to zero. There are many cryptocurrencies who fell to zero, and they are no more existing on the Binance and any crypto markets. These are not monetary at all. Hamza, subsidiary is not an asset. Is never an asset. We obtain shares of subsidiary. Do we? We obtain shares of a subsidiary. The shares of subsidiary are non-monetary because the shares are non-monetary. Not exactly. There is an issuing authority in case of ordinary shares, but ordinary shares do not guarantee you a value. So same case with cryptocurrency. The cryptocurrency does not guarantee you a value. Crypto and ordinary shares both are non-monetary assets. Now shares are financial. Shares are financial because shares owned by me, by investor, are asset, and issued by entity are equity. Asset for one entity, equity for another entity is what? Financial. Crypto is asset for me. It is not an equity and not a liability for any other. There is no collateral and there is no counterparty. The cryptocurrency is non-monetary, non-financial. True, Rina. But in your currency, it is not fixed. In dollars, like if you are in Pakistan or India or Dubai, let's say for instance, you own $50,000. $50,000. Getting my point? $50,000. These dollars are fixed determinable currency units. Converting it into your local currency might fluctuate the value, but $50,000 are determinable. This is monetary. Getting it converted into cash into your local currency can change value of everything. If you buy bonds of foreign currency, then would you say the bonds in foreign currency are non-monetary? Because when I'll be converting into INR or UAE dirhams or PKR, I'll getting a different value. Bisong, I'm not discussing it. I'm not reading your answer, but I second you. I'm of your view, but this is a different sect. If I start discussing and criticizing Bitcoin or crypto, we'll have a fight over here. Safi, yes, if there is a collateral, if the country, this is the future of Bitcoin now, not Bitcoin but crypto. All countries, the central governments of countries will be issuing their own cryptos, the digital currency, the digital tokens. That makes sense. But there will be a regulatory authority. There would be a counterparty. So that would be very similar to cash. Very similar to cash. Yes, Sakib, loan to staff because you have given them the loan and they will be giving you determinable fixed currency units. Yes, Amina. Uh, if I ask you, carrying on the discussion, how would you define intangible asset? Go. Intangible asset. What is intangible asset? Sakib, loan to staff is monetary. It is asset for you, liability for them, financial. And you know well how much amount are they supposed to pay back. That is a monetary asset. Even though they are a staff, but they are supposed to pay the fixed amount back. Intangible asset. Intangible asset. Good. Remember, if you are telling me that intangible asset is something that does not physically exist, if you are telling me that intangible asset are asset without physical substance, you are telling me only 1/3 of the definition. As per IAS 38, Muhammad Islam, you are telling me 1/3 of the definition. As per IAS 38, Saqib, don't quote the examples. Tell me the definition. 3 parts. Identifiable. Number 2, non-monetary. Number 3, without physical substance. If I ask you, receivable, is trade receivable a monetary asset or non-monetary? Sorry, a tangible asset or intangible asset? Trade receivable, tangible or intangible? Sarma, you are going to research and development. I'm just definition. How would you define intangible asset? Trade receivable. Is trade receivable tangible or intangible? Sayyid Bilal, you are telling me it is intangible. Bisong, makes sense. It does not have a physical substance. Sunny, you are going to score good. Touch wood. Wish you good luck. Fair enough, current assets, Saqib, but is that tangible or intangible? Demi, if something is monetary, how come that can be tangible? No, makes no sense. Dhwani, perfect. Perfect. Okay. Sunny, wish you good luck again. Okay, let me make you clear. Intangible asset has got 3 characteristics: identifiable, non-monetary, without physical substance. What I asked about trade receivable, you are focusing on the third part, on the 1/3 of the definition. That can I see the trade receivable? I cannot say, point out to the customer that see, this is my, he's or she is my asset. Of course not. The trade receivable is virtual, does not physically exist. Sali, no. Sali Yusuf, no. All assets that are monetary or financial will not be judged tangible. Repeating, as tangible or intangible. All assets will not be as tangible or intangible. So my question is wrong. If I'm asking that trade receivable, whether it's tangible or intangible, this cannot be judged. It is a financial asset. Good. 3 characteristics. The second one says that intangible asset must be non-monetary. Must be non-monetary. Receivable, of course, Saqib, telling you any asset that is monetary or financial, will not be judged being classified as tangible or intangible. Trade receivable is a financial asset. Trade receivable is what? Is a financial asset, is a monetary asset. IAS 38 says that intangible asset is identifiable, non-monetary asset without physical substance. If you are going towards the third criteria, whether the trade receivable has got a physical substance or not, you are moving forward. Check the first part. Amna, do confirm me about the voice issue if it's continued. Trade receivable is identifiable, but trade receivable is a monetary asset. It is not a non-monetary asset. Trade receivable is a monetary asset. Go back. Go back. IS 38 will say, I'm not going to talk over this because trade receivable will not meet the definition of intangible asset. This cannot be judged as being physical, tangible, or intangible. Sakib, the important point that I highlighted, I'm repeating, any monetary or financial asset will not be judged about its physical attributes. Cash. Is cash a tangible asset or intangible asset? Zayan, be careful. Hamza, be careful. Dhwani, be careful. Cash, tangible or intangible? Ola, perfect. Islam, perfect. Perfect, perfect, perfect. Pooja, sorry, who's this intangible? Butsalo. Butsalo, be careful. Guess again. Zainab, customers are not your asset. If you owe me $50,000 in case, I cannot be your asset. You cannot take me as your slave, of course. I am not your asset, but the 50,000 that you own from me, that you owe, yet that you are supposed to get from me, that $50,000 can be treated as a receivable, but Dinesh Lalwani cannot be treated as an asset for you. The customer is not an asset in that case. Remember, cash, identifiable, non-monetary. Sarmad, be careful. Safi, perfect. Cash, identifiable. Number two, non-monetary. No, the cash is a monetary asset. It's liability for the central bank. Sarita, nice. Sali, nice. But those who answered in hurry earlier will have to spend 3 months correcting the answer. Here it's very easy because I warned you immediately. But for your SBR paper, if you repeat this mistake, you'll get 3 months to correct. With the financial loss as well. Remember, cash monetary asset. This will not, remember, cash not be just physical attributes. Cash is neither a tangible asset nor an intangible asset. It is financial, it is monetary. Oh, then let me close my video, of course, because only you people are seeing me. I cannot see you. Fair. So the voice would be a bit better, I believe. So easy. Cash is neither monetary nor, sorry, neither tangible nor intangible. Be very careful while answering your questions. Moving forward, a contract is not an equity instrument solely because it may result in the receipt or delivery of the entity's own equity instruments. Remember, it is not an equity because it results in the delivery of entities own equity instruments. The classification of this type of contract is dependent on whether there is variability, in either the number of equity shares delivered, or variability in the amount of cash or financial asset received. Okay, Ola, so let me start my video again. And I was also enjoying seeing myself. I can see my expressions myself using it as a mirror. See if the voice breaks, then we'll switch back to this. Oh, yes, looking nice. At this hour of time, I'm wearing formals. Okay. Heath, the problem here is that you can not type long questions. You can do one thing, that on a WhatsApp, we'll be keeping that interactive as well. I'll be sharing these questions with you. You have got the PowerPoint. Type your answer, share with me on the WhatsApp group. Here you can see that we have got very short space, and it's very hard for me to read this. Bilal, you are asking me that if the probability of receiving the cash is 50%, then shall we record it at on? Remember, IS 37 does not specify 10%, 50%, 90%, and 100%. When we learn about remote chances, possible chances, probable chances, and virtually certain, it's the practice of the industry that determines the percentages. IAS 37 does not specify any percentages for likelihood to be remote, possible, probable, or virtually certain. It is industry practice, remember. So if your receivables are exactly 50%, so this is giving a confusion. This is not confusion as per IAS 37, but you should be prudent. You should go a step back, not a step forward. In case of asset, in case of liability, you should be a step forward. Be prudent. Assets must not be overstated. Liabilities must not be understated. Safi, just discussing. Yes, Maha, sorry, I'm telling you, or taking your short name. It's about to end for today. So I'm telling you the agenda for rest of our 4 days. I personally think I would need more days. I'm enjoying this session. I thought I would be talking to walls, but thank God and thanks to you, it's interactive. Safi, if you issue a loan for which you are supposed to pay interest for 4 years, will you record the interest of 4 years today? It will be a cost, yes, and that would be on accrual basis. Since you cannot record the interest of all 4 periods for 4 years today, then how come can you treat the interest as liability or asset? That would be your expense and cash or accrued interest over the period, over the time. So the interest or dividends cannot help you classify it as a liability or equity, but the principal amount can. Are you supposed to pay the principal amount back to the investors? If yes, this is a liability. If no, this is equity. Fair? Since you will be recording the interest expense every year and showing the liability or cash, crediting cash or bank every year, you cannot show the liability entirely in advance for all the 4 years, of course. Botello, actually, you must be very observing. And you're telling me that we can record interest expense, please no. At discounted present value, please no. No. There's a conflict between accrual concept and prudence concept, of course. If I have issued bonds obtaining, say, a $10 million amount, over which I'll be paying $1 million every year for four years, Recording interest expense today at discounted present value is wrong, because interest should be charged to profit loss on accrual basis. When the first year expires, when the first time expires, then is the time when you should show the interest expense. Interest must not be shown as an expense in advance, because interest is payment of time. It is the time value of money and shall be charged to profit or loss over the time. Yes, the interest cannot be capitalized or expensed out using discounted present value in year 0. No. Bilal, there will be no difference. Extra prudent is why is that wrong? Yes, extra. Okay, I can understand. Extra prudent is wrong. You have to follow that accrual concept as well. Good. So stopping it for today, discussing the agenda for rest of our days. I have constructed my own questions. The marine is the question that I developed myself. I will be sharing the answer that I have drafted for this question. The objective of this is to help you understand how should you answer it. Mostly what I see that students are very conclusive. They try to jump on the net answer, that how would I end this question? How would I end this answer? Don't be judgmental. Be discursive. You have to discuss, right? Atkins, agents, I believe. It's copying. Fair. No needed. You're not supposed to practice any past papers for my session, but for your plan, if you have got the plan, you will have to. Remember, I have formulated some, drafted some questions myself. You can find in PPT. Please do me a favor. Draft an answer for marine, sure. Safi, yes, we will be coming over this. You are supposed to draft an answer for Marine Limited. And please structure your answer that how would you start, how would you discuss, and how would you end. Don't be keen to conclude the answer every time, please. You are getting marks for discussions, not for the conclusions. These are some changes we'll be discussing tomorrow. Next is winter's coming, king in the north, Winterfell. Winterfell has invested amount in gold. Can you guide me? If a company puts funds in gold, if a company puts funds in gold, which standard would apply? Anyone? If a company invests in gold, which accounting standard would apply? Is there any? Hamza, IFRS 9. Pooja, IFRS 9. Sharik, IAS 16. Makes sense. IFRS 9, IFRS 9. 38, Samuel. Is gold intangible? Doesn't gold has the physical substance? Amna, IS 40, okay. IFRS 16 is for mining. Not 16, that is IFRS 6, Ola. If you mine, but if you invest, simply like in cryptocurrency, there are two different beliefs. One are crypto miners and other are investors. So miners have to apply different accounting treatment, and investors are supposed to follow different accounting treatment. IAS 16, IAS 2. Zarian, if the company is gold broker, if the company purchases gold for resale, if it's goldsmith, then IAS 2 would be suitable. But company has invested in gold. Amna, you are fine, but conclusion will not gain you marks. You are right. I'm telling you, you are right. But you'll not get marks for this. IS 40 investment property. What is definition of property, by the way? Mohammed Safi, I agree with you. I agree with all people who are telling me this should be treated as IFRS 9. Server, IS 21 doesn't suit because this is not currency at all. This is no more exchange accepted as a barter. Hamza, we cannot obtain contractual cash flows from gold. Who is going to give you the contractual rentals on gold? IS 40 makes sense. Zelna, IS 7 doesn't make sense because the value of gold fluctuates. This cannot be treated as cash equivalent, but fair. Things can be discussed. Very nice. Things can be discussed. When drafting your answer, when writing your answer, you can go that way. That my understanding said that gold should be treated as a cash equivalent, and then you can deny it. You can say that gold should be treated as IFRS 9. You can deny it. Gold should be treated as under IS 40. You can deny it. Discuss. Raise a point. Discuss. Deny or accept. No, Hamza, contractual income, that means there must be someone to give you guaranteed amount. There is nothing guaranteed in the gold. Borsalo, yes, IS 40 is correct. But what is definition of property? As per IS 40, you have all gone through. What is definition of property? Sunny, we'll be discussing that. Time management, yes. Anything, not Amna, anything is investment, is for investment purposes. No. Zayan, IS 21 could have been if this was a currency, but gold is not a currency. No, what is property? I'm not talking about investment property, please. I'm asking you what is property. Very nice, Dhwani, perfect. Dhwani has specified that IS 40 is incorrect. I'm reading her answer. IS 40 is incorrect. It's not land or building. Very nice. What is property? Hamza, gambling over what? Gold? Yes, possibly. Yes, possibly. But gold is believed to be secure. Don't know why. It has got no consumption anymore. This is not an executionary contract, Ola. If you have sold it already, if you have got its fixed value fixed, that is not the case. You have just obtained gold. So you obtained a gold for certain dollars, and after some time, this value changes. Won't you be affected? You would be. There's no contract. Who have you contracted with this? You have just obtained the gold bullions, and these are yours now. The value fluctuation since the day you have acquired, since up to the date you will be selling it, is your risk and reward. What is property? Property, as per IS 41, please, is piece of land, not just Sarmat. Complete definition of property, not investment property. Sirf property, please. No, Sabina, you are very poor at IS 40. Sorry, please don't mind anyone. Hamza, IS 16 does not require annual revaluation. It just requires significant differences. Borsalo, it's not just buildings. Let me type the answer. IAS 40 says in fact I cannot access this. IAS 40 says property is land, building, part of land or building, or both. Machinery is not property, Safi. Machine is not property. This is very alarming. You people are not clear about the definition of property. Please don't. IS 40 specifies the definition of property. Property is land, building, or part of land or building or both. George, gold is not property. Being very clearly, gold is not a land, gold is not a building. Fair. So let's stop discussing it now. I have developed a question, Winterfell, and shown that Winterfell has invested funds in gold. Gold is an asset, Junaid, of course. Dhwani, yes. In Monopoly, we buy lands and put buildings on it, and only the land, buildings, or part of land or building or both can be treated as property. Any asset is not property. No, Peter. No, Peter Bashir. Please be clear. I wish the examiner doesn't test IS 40 this time. I wish. I personally wish. Please, you have got the handouts of your respective tutors or ACCA articles or glances or IS summaries. Just go to Google or search IS 40 summary or IFRS IS 40 at glance. You can see what is the definition of property. Property is land, building, part of land or building, or both. Gold is not meeting the definition of property. So how can we apply IS 40 on this? Gold is not a property, but so you will have to draft an answer. If you want to get help from any article, any Google article or anything, you can. But by the end, draft me an answer. How should Winterfell treat gold in financial statements? Remember, those telling me that this should be treated in A way, those telling me that gold should be treated in B way will both be getting same marks if they are justifying the answer. George, let me read this again. You said property has physical substance, though gold has physical substance. One can acquire or invest in gold, but physical access to the gold. It is a physical asset. Yes, of course, this is not an intangible asset. So those who were classifying gold as an investment in an intangible asset, I said that should not be classified as an intangible asset because that is tangible. Yes, of course. No, Safi, if you judge a wrong standard, if you go totally wrong, like in this case, the people who are going through IS 38 are totally wrong. That makes no sense of discussion. Yes, Avinash, you're true that gold can be held for capital appreciation purposes. So this is meeting the part of the definition of investment property. But property, IAS 40 says property is land, building, part of land or building or both. Gold is not a property. Still, stop discussing this now. It's your task. You will Google it. You will search your notes. You will search your handouts or anything. Construct me an answer to this Winterfell Limited, and I'll be checking how are you answering this investment to gold. Okay, let's move to capital now. King's Landing, Baratheons and Lannisters. I have set an example that this company has invested in Fitcoin. Sounds good. We must launch a crypto with Fitcoin. It's Fitcoin. Well, so King's Landing is normally dealing with furniture, but the company has invested some amount in Fitcoin, that is crypto. You will have to tell me how should this cryptocurrency be treated, not conclusion. Please don't draw the conclusion. discuss. If you are taking it to IS 7 cash equivalents, go and discuss. If you are taking it to IS 21 foreign currency, go and discuss. If you are taking it to IFRS 9 financial asset, go and discuss. If you are taking it to IS 38 intangible assets, which is most probably the treatment determined by interpretation committee, go and discuss. Your conclusion does not actually matter, your discussion does. Examiner appreciates if you discuss. You're most welcome, Hamza. I enjoy teaching, I don't earn. Okay, let me share it here. Why not? Why not, Safi? Could you access the link? I have attached the link to ACA's article on cryptocurrency, but please judge it yourself first. Fair enough. Safi, you can see this, that crypto is nowhere dealt with by ISs. Of course, this is something very new. ISB has to sit over this and see if this can be accepted, and should we spend some time developing a standard. So we'll have to compromise. If you say that crypto has been acquired for FETPL purposes, for capital appreciations, fair, but it is not meeting the definition of financial asset, so what? We'll have to compromise. We'll have to compromise. If this was meeting the definition of a financial asset, then IFRS 9 was applicable on this cryptocurrency. The problem we are facing here, that there is no standard dealing with the cryptocurrency. So you will have to apply the management's judgment. And the first judgment is similar standard. If there is no such conceptual framework, no, see if any standard setting body in USA, in India, in Dubai, or anywhere has developed a standard. If yes, follow that. Better for discussion, Amna Merson. You can enter a standard and exit immediately. Say you entered discussing IS 7, that the cryptocurrency might be cash equivalent, but you said this is a risky investment and there is no determinable currency units. So this is not meeting the definition of cash equivalent. Pull back. Next, go to IFRS 9, go to IS 21, go to IS 38, go to IS 40, whichever you believe suits better. Go in, discuss, come out. Go in, discuss, stay there. Understanding? Read your answer. Sakib, yes, intangible is meeting the definition, but meeting definition of something does not serve tomorrow. Sarita, this is not cash equivalent. Matlab is something that can be easily converted into cash. We have got some T-bills or government financial instruments. These are easily convertible into cash within 90 days. So any instrument, any investment that is easily convertible into cash, the bank account is cash equivalent. That is easily converted into cash without undue risk is cash equivalent. Zelna, we have got WhatsApp group. If you people have joined it already, do share your answer over there. I'll go through it and see how are you responding to it. Zarian, maybe. I'm telling you not to answer me here. The way you will be sending your answer to the P2 examiner, to the SBR examiner, draft. An answer that should be coming from here, or the related articles from the Google. You'll at least be thinking over something, and you'll be finding the way out yourself. This is what I want. This is what SBR examiner wants. It's judgment. It's not just application of IFRSs. Remember. Fair. So I'm giving you assignments of 3 questions: Marine, Winterfell, King's Landing. Yes, of course, Safi. Safi is asking, can we discuss more than one standard in particular question? Yes, why not? Why not? You can. Even you can apply more than one. If you believe that treating a certain asset under this or this can be acceptable, that is your judgment. Remember, you are not challenging IASB. IASB is silent. When IASB is not telling the accounting treatment, we can develop our own, and your treatment can be your discussion should be constructive. Yes, we have class at the same time. Signing off for today. For the rest of the sessions, I have constructed some questions. Let me immediately show you. I have got this question for consolidation, and I have drafted or constructed this question the way you will be getting in your exam. So day 2 we'll spend on discussions. I personally believe this is not a waste of time. Interacting and getting your concepts, sharing my concepts. This is two-way communication, and this is very helpful. Yeah. So I'll try to dig out what is in your mind. Like, I was very surprised to see you don't even know the definition of property, and I'm focusing you to read IS40 properly. I can at least dig out that where your minds going. You can be correct. Anyone can be correct. We'll be keeping tomorrow's session interactive. Furthermore, we'll be going towards question number 1, which I have constructed myself. You can see on the screen, and I'll be sharing this question tomorrow. Fair. Then question 2, that would be part of section 1. I have developed another question myself. Fair. I cannot share the source of this. I have of course taken guidance from some sources. Netstock. Okay. So having some ethical concerns as well. Question 3, I have developed myself, and we'll be focusing on this Lord Frey. Sure, Sakib, I'll be sharing the presentation on WhatsApp as well. Lord Frey, and this is the question we'll be solving. I believe that way, because I was going through the past practice to past sessions and could observe that all the teachers were practicing the past papers. So I thought of developing my own questions or using from another sources, because past papers are something you already have access over, and we'll be developing our own answers. So you'll be helping me, I'll be helping you, and we'll be learning how should we send an answer to the examiner. So if I'll be making the answer with you in your connection, you'll be sharing some ideas, I'll be sharing some ideas, then we'll be getting to decide how should we answer an SBR question. Ola, by the second half, I believe we'll be getting towards consolidation, but I would spend some time on discussions, because I personally believe that you should divert your mind from regulatory framework to conceptual framework. So IAS 8 is very important. I have made some questions here as well, which I'll be confusing you for, and will be enjoying your answers. So I don't personally believe that we'll be reaching consolidation by tomorrow. We have got IS2 some errors and retrospective changes. Plus, we'll also be discussing the current developments that are exposure draft and the changes expected in deferred tax and anything. Agents, you are supposed to practice these 3 questions: Marine, King's Landing, and the third one was, yes, anyone, gold and crypto. So you have got this PPT. Practice these questions for tomorrow. You have enough time for this. Yes, Winterfell Hamza. You have enough time for this, and we'll be coming over question number 1, 2, and 3 later on. I'll sharing all these questions and our mutual answers, which will be forming towards through our discussions by the end of this webinar. Dhwani will be covering IAS 8, very important area, IAS 8, and retrospective errors, very important, I believe. So tomorrow we'll be covering IAS 8 because application and judgment is more important. Safi, now that depends. If you have already gone through your book, then you should start practicing past papers and start drafting your answer on Excel and Word. Don't practice it manually anymore. Your exams are CBEs. Please don't waste your time practicing it on manual papers. And pick up some questions from past papers recent and start attempting. Then verify the answer with that of examiner. Oh, we have taken too long today, and I'll not be paid extra for this. Kidding. Last paper, are you done with that other SBL and optionals by song? Wish you good luck. Oh, fair. Is there any country? Sorry, I was assuming my country, Pakistan. So sorry, I missed. Those who are, of course, attempting manual must practice manually, but majority who are getting on CBEs should stop practicing on the paper. Sunny, I just discussed that we'll be covering IAS 8 tomorrow. Then we'll be heading towards consolidation and further standards. But tomorrow will not be, I don't believe that we could reach the consolidation point. We'll be spending time on IAS 8, which I believe is of paramount importance, very important. You should be very expert in applying IAS 8. Signing off. Thank you so much. Inshallah, we'll be meeting tomorrow. Best of luck. Thank you so much. And join WhatsApp group immediately so that the files I'll be sharing should be once. I should not be getting requests that I've just joined your WhatsApp group and missed those handouts. So please be easy for me. Thank you so much. Bye bye.